Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and welcome to today's podcast. Thank you for tuning in, and I hope you have been enjoying the last few podcasts that we've had. I've had some pretty good reviews, but, people tend to tell you what you want to hear. So if you like it, fantastic. If you don't, let me know what you want me to talk about, because I am happy to talk about those things. Okay, today we are going to talk about how do we find money to start this thing? A lot of you, that is probably what's stopping you, right? You've read the book, you think it's great, you followed me on Facebook, you think it's fantastic, you've seen me somewhere and you're like, man, this is a great concept, but I don't have the money to start this. I'm going to wait till I'm debt-free. Let me clue you in on a little secret. You're never going to be debt-free. As long as you are breathing, you will be spending money. You have to eat. You have to pay taxes. And even when you're gone, there is a funeral to pay for. There is always going to be something that is going to take money. And it is all how you utilize that money that is going to determine if you can start this process or not. It's all how you think about the money that you have now and how you treat that money that is going to determine if you are able to start this process. So let's just look at a couple of ways that we're using money that maybe we can redirect it and we can start this process without having to wait until we are completely debt-free. Number one, how many things are you paying cash for? You sell grain, you sell cows, you sell whatever commodity it is that you're selling, and you go and buy a vehicle with cash. You go and build a building with cash. You go put a down payment on a piece of land with cash. You go buy cows with cash. At the end of the year, you pre-buy fertilizer, chemical, feed, seed, fuel with cash. All of that money could have first gone into a whole life insurance policy. And guess what? 7 to 10 days later, you can be borrowing against it to still go buy feed, seed, fertilizer, build the building, put a down payment on the land, buy a piece of equipment. Whatever it is that you were using that cash for, it's still accessible to you that quickly. But instead, we want to just get it paid for and then say, well, when I have some extra money, I'm going to start this. When are you ever going to have extra money? You are constantly wanting something. One thing gets paid off, and guess what? Now you think you need to buy something else because we got some extra cash. The tax man said we need to do it, so let's go ahead and do it. Is there a way that we could use some of that cash to put it into a life insurance policy and then utilize that money from there? And we can still accomplish all those same things. What are you using cash for? And when you used that cash, okay, this is going to be a little bit of a challenging thought process here, so put your thinking caps on. If you built a building for $80,000 and you used cash, are you going to pay yourself back for that $80,000? Or are you just going to say, thank goodness that is built, and now I don't have to pay myself back? Because guess what? You lent money to the farm. You and the farm are not the same entity. You work on the farm is your business. You personally lent $80,000 to the business to build a building. They need to pay you back. If you used money in the in the farm account, then why aren't you paying the farm back? Because the farm lent the farm money. What happens with that payback money? That might be used to start a life insurance policy. $80,000 building, you might want to pay that back over the next 20 years. Great, we just found 20 years of premium. Are you overpaying on debt? Are you overpaying on land debt? Are you overpaying on student loans? Are you overpaying on your mortgage? I talked to a guy that's making double payments on land. There are people doing it. And why? You just gave the bank liquidity of your money. You just took liquid money and you gave it to the bank. We could have put that in a policy. We could have used that for premium. So do we need to overpay on debt? I talked to some farmers and ranchers who the bank's name is on that paycheck, and they are taking every single check. And the farmer has no idea where they're applying this. And they feel as if they can't give the bank a little bit of pushback. No, I'm here to tell you to push back. Okay? Yeah, I understand that it's hard to get that bank to maybe give you the money and you've looked all around. But just because they gave you money, does it mean that they are allowed to steal from you? What are they doing with it? Maybe they're not stealing it, but please explain to me why every single paycheck that I get has to go to you just because your name is on it. Why can't you release some of that cash to me? Now, if they need it to justify making all your payments, then great, take it. But you need to start paying attention to that, because if you're overpaying them, that's liquid money that we could use to start a policy. Do you have equity in something? Do you have equity in land? Do you have equity in your home? If you have equity in something and it makes sense, could we take some of that equity? Could we refinance and take some of that equity to start a policy? Now, be aware, it needs to make sense. I have a client who was so excited she paid everything off. She was ecstatic because she did not have a mortgage any longer. Her son wanted to buy rental property. So she refinanced her home, put the money into a policy, borrowed against the policy, and lent it to him at 10%. It was a win-win. He got to buy his rental property. He's still making money over whatever the payments are that he's making to his mom. His mom is making nearly 6% interest. Passive income, interest income is passive income. So she's only paying federal and state on that, not Social Security and Medicare. And he doesn't care that he has to pay 10% because it's going back into the estate he's going to inherit. He doesn't care. He got his apartments. He's cash flowing. Mom's happy. She's cash flowing. She knows that she's going to have the money to make the house payment because it's coming out of his payment. It's absolutely fantastic. And she's making some interest on the money that she had as dead equity sitting in the house. So does it make sense to do that? Not all the time, but there is an option to look at that. Are you contributing to 401ks or IRAs? Do you have money sitting in IRAs? What do you have in investments sitting there, and do you like them there? Okay, I'm not going to tell you that you should be using them, but people tell me, I don't want it there. I read your book and I want to use it to start a policy because I want liquidity of that money. Right now, I'm 35 years old and it's sitting there and I have until 59 and a half. You know how many market crashes there can be between now and 59 and a half? And I'm paying the bank 5, 6, 7% interest and this thing is making 2.5%. What is the point? I want to use it to start a policy. Okay. Let's look at doing that. Can we use it to start a policy? Can we use it as a backup to premium that we already maybe found a different amount for someplace else using cash, whatever the case may be? And now we say, all right, worst case scenario, you get into a year where it's really tough and we can't make that payment, now we can go to our IRA and we can pull a little bit of money out of there. Okay? We don't want to pull it all out right away, unless you do, I guess. I mean, I've had some people do that, which even I think is maybe a little bit crazy, because if it's going to affect your taxes, we don't want to maybe do that. But we really have to look at all the scenarios. Is it a Roth? How comfortable are you with it? And how comfortable are you with the decision of a whole life insurance policy? And using the infinite banking concept, if we can combine all of that and move you forward in farming, is that better? And I talk about this in my book. And I have a whole chapter called The Market Scam. You guys have a lot of stuff at risk. In fact, it's your whole livelihood at risk. So do we need to put our retirement at risk as well? Or can we move that into more of a secure tool that we can use today? And so something to think about as well. Do you want to take that match at work? Do you want to put that money in a policy? What do you want to do? I have some clients, and I think this is great, but we all know I don't like the market. So I have some clients who have actually gone to their employers and said, I don't want your match to go into a 401k. I want it to come to me in a paycheck so I can put it in a life insurance policy. Talk about throwing an employer off. They have no idea. What is this person talking about? I mean, I've talked to the HR department of one particular company, and let me tell you, they were not real receptive to this, because those people are very indoctrinated into the fact that we need to be putting money into a 401k or an IRA. So most likely, if it's a big company, they're going to say no. Now, I do have some clients that have gone to their boss and said, hey, I would like this put into a life insurance policy. And the company is more than happy to give them the income on their check and give it to them as a bonus or whatever it shows up as. And then it goes into a life insurance company, and it's usually a smaller company that is open to something new and learning and doesn't really care. A bigger company has their financial advisors who are pounding at their door and not really so nice. So that's another avenue, though, of where we can go to look for money. 401ks, IRAs, Roths, those sort of things. If you don't like them, if you're not comfortable, if you're worried about the market, if you want to have access to money right away. Have you paid yourself back for any cash that you used? So if you built that $80,000 building because you needed a building, so you took $80,000 of cash and you built a building, did you pay yourself back? No. Well, then I ask, why not? The infinite banking concept teaches us you need to pay yourself back. Treat cash as if it was a loan, just as if you were going to go to the bank, you were going to use a credit card. Large amounts of cash, you should be paying yourself back. If you lent $80,000 to yourself to build a building for the farm, now the farm needs to pay you back. That needs to be part of your expenses on your farm account, that we need to pay ourselves back for this $80,000. What are we going to do with that money? Maybe we want to use that payback as premium for a policy. If we've decided to pay ourselves back over 20 years for the money we lent ourselves, then we know we have 20 years of premium. So definitely something to consider. How much cash have you utilized? I have a fantastic client who is in his early 20s, and it's just awesome. He read Nelson's book and he read my books, and he just dived into as much information as he could. And after our first phone call, he emailed me and said, this is how much money I have to start a policy because we've stolen from ourselves for the last 3 years. And I went back and we're going to pay ourselves back for all the things we purchased with cash in the last 3 years. That's a pretty big deal. That guy gets it. He gets exactly what R. Nelson Nash the developer of the concept of infinite banking. He gets exactly what R. Nelson Nash was teaching us. And it is so exciting because he has now found the money to start a policy. Even though they maybe don't have a lot, he knows that he can pay himself back for those 3 years of loans his entire life if he wants. It doesn't matter. He gets to use that as a payback and use that premium to start a new policy. Nelson had 49 life insurance policies. This is how he most likely did it. I'm not going to say this is exactly how he did it, but these were all things Nelson taught us. So obviously this is one of the things that he did. When he bought something, he paid himself back. And if he used cash, that payback went into another policy as premium. Did you finance the purchase of land for somebody else? So now I'm talking most likely to an older generation here, but are you ready to get out of the farming world? And you're saying, all right, I want to just sell out. But guess what? The next generation coming in just doesn't have the money they need to buy it. So they could go to the bank, or guess what? You could finance them. Yeah, isn't that a concept? So you could finance them over 20 years or 30 years, and the payment for the land that they make to you, some of that payment or all of that payment could go to start another life insurance policy or a life insurance policy. If you don't need all of it to live, can some of it go into a life insurance policy? Did you maybe want to decrease the amount of land you have and you want to sell to the neighbor? And guess what? You can finance him. And then you could buy a policy on him, but that is a story for another day. But if you finance somebody and they're making payments to you above and beyond what you need for living in this situation, can you use that for a policy? I don't think that we look at this as an option enough, but it is truly an option, and it might be an option that people need to consider, and it might be a whole podcast that I need to do, because we really aren't seeing the big picture of self-financing or financing other people and playing the banker and putting that banker hat on. However, can you do that? So there are a lot, and then of course we just have extra money, right? So we have some extra money, we're making a profit. Can we use that to start a policy? Well, of course, that's kind of a no-brainer, but I'm going to throw it out there. And at what point do we start? How much money do we start with? That's the next question. How much do I start with, Mary Jo? I don't know. Well, I don't know either until I get into your numbers. I can tell you, I have people with policies from $3,000 a year all the way up to $100,000 a year. It truly depends where you're at financially. If you're in a really tough situation, maybe we need to start really small, or maybe we don't start at all right away. If you're in a better situation, then great, we'll start a little higher. But what we don't want to do is get our feet in so deep that we can't get out. We have to prepare for the what ifs. And so we have to start where it's really comfortable, and everybody's comfortable is going to be different. And so just like somebody sits in a room and they're comfortable is 60 degrees, somebody else needs to be 85. What is your comfortable depends on where your finances are. Depends a lot sometimes on how old you are. But even that isn't always a factor. I have 20-year-old clients with $40,000 premiums, and I have 50, 60-year-old clients with $20,000 premiums. So it really depends where we're at, what our cash flow looks like, but we have to look at all of these things. And that is why I sit down with my new clients and my existing clients if I need to. But if you're a first-time client coming to me, it's an hour-and-a-half meeting. I really want to know what's going on and where are these numbers at. And if you can't tell me where your numbers are, then we're not going to be overly generous on a premium, because I'm a little bit leery you're not keeping your books and you don't really know. And we don't want to start something so high that you can't pay for it. So it's important that I know everything that's going on. I think it's funny when I sit with a client for the first time and then they forget to tell me they have rental property or that they're putting a down payment on something. All of those things are super important to know, because I can't strategize and make a plan if I don't know exactly what it is that you're doing. I don't know where that premium needs to start. I don't know where it all is coming from. So we really need to look at all of that. And these are a lot of things that you guys really need to make sure you're watching as well. Open your eyes to where is that money going, because it's all about how you think and all about how you utilize that cash. So when you start or when you continue using your money, really sit back and go, what am I doing here? Could have I put that in a policy and then borrowed against it to buy that tractor or put that down payment on that piece of land? Or could have I put it in the policy and borrowed against the policy to buy that piece of equipment or to buy those cows or to build a hoop building if you've got hogs or something of that nature? So think about that, because those are all places we can go to get money and start a policy. Small or big, doesn't matter. It's the fact that you're getting started. So I hope that has helped, and I hope that that's opened up some thought process for you, and that you're not going to sit back and go, oh, I'm going to wait until I'm debt free, because that day may truly never come, right? And being debt free does not mean you created wealth. It just means that you're debt free. Now, I don't like to have debt either, but I do want to create wealth, and I want that money working for me. So even though we've paid off some debt and we're debt free, what are we doing with the excess cash to create wealth? That is what we are here to do. And with that comes a thought process. And that is where infinite banking is the key. So I hope that helps today. If you have questions, reach out. Happy to answer those. If you've not gotten the book yet, grab the book, read it. I also have it on audio, so you can find that on the website as well. Let me know if you need anything, and I hope that you guys have a fantastic day. Talk to you soon.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.